This is the Asia Trade. I'm April Hong at the Goldman Sachs Asia Leaders Conference in Hong Kong.
And I'm Paul Allen in Sydney. The top stories this hour. Asian markets set to rise this morning as weak US job openings reinforce bets of a Fed cut this month. Traders looking ahead to key jobs data due later. President Trump suggests current trade deals could be axed if US courts strike down his move to impose global tariffs. Those levies forcing India to cut its consumption tax in a bid to shield its economy. Also, our exclusive interviews with the CFOs of Meitu and Daqo New Energy from Goldman Sachs Asia Leaders Conference. All right, so let's take a look at how we're shaping up for market opens this Thursday in the Asia Pacific. We might expect to see a few modest gains after those job openings in the US fell a bit more than expected, down to 7.18 million. That's the lowest level we've seen in 10 months. We'll get more reading on the health of the jobs market in the US later this week. But that did cement bets of Fed easing later this month. So we're seeing futures here in Australia better by a third of 1%. Things kind of flat in Japan at the moment, and the yen still pretty weak at 148.05, of course, against that backdrop of ongoing political instability. Let's take a look at US markets. Meanwhile, as I mentioned, those jobs numbers really reinforcing this view that the Fed will cut in 2 weeks' time. We've got S&P futures looking pretty flat at the moment. A lot of focus, of course, though, on the long end of the yield curve at the moment. We did see the 30-year almost touching 5%. We're seeing similar moves in the UK and Japan as well. And we heard from a number of Fed speakers also. Chris Waller saying lower rates in September, maybe multiple cuts in the coming months, but a bit of disagreement. Raphael Bostic saying just one cut appropriate for this year. Alberto Mussolem, meanwhile, saying the borrowing costs are well positioned. Crude prices a little bit softer. There is a suggestion, a fresh report from Reuters, that OPEC might be considering a fresh round of production increases at its weekend meeting when it settles down to discuss October supply. Avril.
Yeah, Paul, as you just mentioned there, the long end of the curve is in focus. We also have these Fed independence worries playing out in gold. We heard from Treasury Secretary, the former Treasury Secretary, Larry Summers, and he talks about, really not mincing his words here, that they are at the foothills of a credibility crisis. And of course, this is following on from Trump calling for 3 percentage points in cuts. That is something that Larry Summers says no economist anywhere has endorsed. He also cited Trump's pressure on Powell and then moving to fire Lisa Cook without due process. Have a listen.
What the president is talking about, what he's explicitly scheming about on his Truth Social account and in some of his rhetoric, is getting a majority of the Board of Governors and using that majority on the Board of Governors to force a majority on the Federal Open Market Committee by controlling the appointment of regional feds. So this is not a one and done thing involving just the chairman. This is an attack on the governance of the institution.
Yeah, it's not just US commentators who are concerned about this, Avril. I mean, typically other countries stay out of the other countries' domestic bank matters. But we've heard from the Bank of Thailand governor expressing concern around Fed independence. Andrew Bailey also weighing in. He's typically been pretty circumspect when it comes to commenting on whatever the Trump administration does, but not today. Let's take a listen.
So this is very concerning, and let me just make a comment on why it's concerning for me, the underpinning point, because this applies to all central banks, I think. Monetary stability and financial stability, which are our two objectives, underpin, I think, sort of the foundations of policy. One way of putting it is that if we do those things, we enable you then to go off and take decisions, in the areas that appropriately, governments and Parliament should take decisions in, which involve things like sort of distribution issues, knowing that the foundations are sort of sound. And I think that's important. It was very strongly the view I know of the government when the bank was made independent, certainly in respect of monetary policy.
Economists disagree on, but I think one thing that they all tend to agree on is that central bank independence is a good thing. There's a danger that there are spillovers, negative spillovers, right? Because if people start to see, even in the U.S. this can happen.
Well, President Trump's intensifying attacks on the Fed have investors rushing to gold as a safe haven amid rising uncertainty. Garfield Reynolds, who leads our Markets Live Asia coverage, joins us now. So, Garfield, we've got assaults on Fed independence. Of course, Fed rate cuts firming for September. Job openings kind of weak as well. In this environment, where's the ceiling for gold?
Well, we're going to find out at some stage, I suppose. But gold had found a temporary resting place, at least, over the last few months, as I think a lot of that had to do with the perception that tariffs were not turning out to be as disruptive, or at least as immediately disruptive as feared. Now, when we've got, I think it's not just about the central bank independence side of things, that is important, but it's also the realization that this independence debate is occurring against a backdrop where the US could be heading for a severe slowdown. That's why rate cuts are seen as appropriate, even by some commentators who aren't necessarily basing that on President Trump's calls. And President Trump, remember, his beef with interest rates is not that they're too high for the economy per se, but that they're keeping borrowing costs for his government too high. That's what he has focused on. So all of that adds to the not just the policy uncertainty mix, but the outcomes uncertainty mix. If you could step back and just look at a situation where, yes, jobs growth is slowing, but the unemployment rate is only 4.2% or so, which historically is pretty low, and meanwhile the Fed's favoured inflation gauge is at 2.9%, you would say it's very much a coin toss as to whether you should cut rates this month. Certainly doesn't look at the moment that you should cut rates rapidly just on that basis. If you're just looking at those figures, of course, central bank does a lot more than just look at those figures. And it is very interesting to see the way that equities rebounded along with bonds overnight because of those poor jobs data. Now, if that jobs data is signalling a severe downturn, which is what would back the central bank making a series of cuts, then for equities in particular, that's dangerous. And that brings us back to gold. One of the things gold has reliably done is outperform as the US economy heads into recession. So I think it's not just that the Federal Reserve's independence concern is driving gold. I think there's also that realization that a recession could be coming, and if it is, gold is a very good hedge. So because if federal bank independence is going to go away, and so the Fed is going to cut rates too much and risk inflation coming back, well, that's good for gold. If actually, probably by now the Fed should have cut rates because the economy is rolling over, then that's going to be bad for stocks, but it's going to be good for gold. So you've got a sort of a win-win for gold and a much more balanced outlook for equities, which are very near record highs and at very high valuations. So all of those factors are driving central banks to buy gold, driving hedge funds to buy gold, driving individual investors to buy gold via ETFs. We saw a big surge in buying from ETFs recently. So it's a very positive outlook for gold right now.
We also heard from the St. Louis Fed President Alberto Musalem talking about how policy is in a good place. Take a listen.
The current modestly restrictive setting of the policy rate is consistent with today's full employment labor market and core inflation nearly 1 percentage point above the Fed's 2% target. Looking ahead, I expect the labor market to gradually cool and remain near full employment, with risks tilted to the downside.
Musalem, they're warning of the risks. What do you see as the risk, Garth, and how is this going to play out in the curve?
Yeah, well, I mean, the risks are very much towards a potentially stagflationary outcome. So that's one where growth slows, but inflation stays high. Musalem was stressing how high inflation is relative to the Fed's target. And if inflation is going to go up, then that's bad, in particular for the long end. So, the curve steepening trade has had a lot of legs. We might well see some fresh impetus towards global curve steepening later on today when Japan sells 30-year bonds. There's been quite a sell-off in the long end there. Question is, how many investors are willing to buy your 30-year bonds even when yields are now at the, what's a very fat level for Japanese bonds, 3.3% almost. Will there be enough demand, or will we get a fresh sell-off in the long end in Japan? We've got lots of concerns about European long-end debt, both because of the France budget situation and because of the UK's difficulties. So with all of that, you could then get a feedback loop that could send the 30-year US yield climbing. Meantime, investors are looking at the idea that 2-year yields in the US in particular, 5 years as well, that those are going to be far stickier, more likely to go down and less likely to go up because of that expectation that the Fed will ease, at least it's very, very likely it will ease this month. And the question is whether it then holds, to check the data. But either way, that's a much better outlook for the short end than for the long end, hence curve steepening, those dangers with the very long end of the curve. And that also then feeds back into the demand for gold and into some of the fragility for equities, in particular tech stocks, which led the rebound yesterday. They've been very sensitive to the long end of the curve in recent years because in many ways they have a similar profile for your expectations. You are expecting good returns from tech over the long term.
It does sound like a lot of these roads eventually lead back to gold as well. Garfield, thank you so much for your insights. Garfield Reynolds, who leads our Markets Live Asia coverage. Now, President Trump's pressure campaign on the Fed to cut rates is set to gain ground Thursday with an accelerated Senate confirmation hearing for his pick, Stephen Moran. The hearing will show how Republican senators may balance their support of Fed independence against loyalty to Trump. Moran's pending confirmation comes as Trump also tries to oust Fed Governor Lisa Cook. She's suing to block that dismissal. And President Trump has also suggested that trade agreements struck with economies including Japan and South Korea might be at risk. That's if his global tariffs are ultimately ruled illegal by U.S. courts. Let's bring in Bloomberg Digital Politics editor Romy Varghese. So, Romy, what does it mean for trade deals if the Supreme Court rules against Trump's tariffs?
Yes, Trump's comments today just added to the uncertainty over global trade right now. He said today to reporters in the White House that, well, if his tariffs are ruled illegal, these are the country-by-country tariffs. If these are ruled illegal, then perhaps these trade deals would be unwound. And these include deals with the European Union, Japan, South Korea. This will be, of course, incredibly frustrating to these economies, to these diplomats who spent hours coming to D.C., trying to talk to Trump and his officials. And it really adds this layer of uncertainty over global trade. And it won't likely be resolved very soon. And we do know that no matter what, Trump is intent on imposing tariffs, whether it's through this avenue or with others.
So what's the likelihood of the court ruling these tariffs illegal?
Well, I should caution that we have yet to see Trump's appeal. He has said that he was going to appeal directly to the Supreme Court, and that could come as early as today. We have not seen that yet, but we do know that he wants an expedited decision. The appeals court that said that these country-by-country tariffs are illegal, let the tariffs stay in place through October 14th. So we are expecting an expedited decision, an expedited ruling, and we do have to note that the Supreme Court in many cases has ruled in Trump's favor recently. But again, I would caution that we do have to wait until we see what Trump and the administration put in their appeal to the Supreme Court.
All right, Bloomberg's digital politics editor, Romy Varghese there. Other geopolitical stories that we're following, stocks of US optical fiber firms such as Corning are in focus after China imposed levies on additional imports. That's after a 6-month investigation found American companies evaded the country's anti-dumping measures. The duties ranging from 33 to 78% took effect on Thursday, Beijing time, and those levies are set to last until April 2028. President Trump says the US could increase its troop presence in Poland and indicated that more financial penalties targeting Russia could be implemented in the coming days. His remarks come as he prepares to speak with Ukrainian President Volodymyr Zelensky and European leaders. Earlier this week, Trump, in a radio interview, also said he was very disappointed in Russian leader Vladimir Putin as peace talks between Moscow and Kyiv stalled.
I have no message to President Putin. He knows where I stand, and he'll make a decision one way or the other. Whatever his decision is, we'll either be happy about it or unhappy. And if we're unhappy about it, you'll see things happen.
Now, still ahead on the Asia trade, we're live from the second day of Goldman Sachs' inaugural Asia Leaders Conference. We'll be hearing from the bank's chief APEC equity strategist and tech firm Meitu CFO. Also to come, Apple's big plans for Siri. We have a scoop on Apple's timeline for adding AI into its devices just ahead. This is Bloomberg. We're keeping tabs on Thailand's political crisis as it continues to deepen as rival parties jostle to undermine each other's bids for the premiership. The People's Party announced on Wednesday it would back Anutin Charnvirakul's bid to form a government on the condition he calls for elections within 4 months of taking office. But the rival Pheu Thai party has moved to dissolve parliament, which could block Anutin's ascent. Despite the political uncertainty, the Bank of Thailand believes interest rates are roughly where they need to be. Outgoing Governor Sethaput Suthiwartnarueput told us exclusively that only a deterioration in the economic outlook would warrant another rate cut.
I think that for us, the Monetary Policy Committee, I think, is reasonably comfortable about where rates are now. We've always emphasized that when we set rates, we do so in what we call an outlook-dependent manner. And so the outlook, as I mentioned, particularly for this year, seems pretty much consistent with what we had been expecting. So we feel that the rates as they are consistent with that, and that takes into account, again, even the newer risks that we've been talking about. The uncertainty, as I mentioned, has more to do with next year. And then again, that I think we need to see how things evolve on that front. But the thing I would urge also to keep in mind is that we do have a limited amount of policy space left. Rates are 1.5%. That's about, what, the 4th lowest in the world? I think it's only, what, Japan, China, the Swiss have lower rates than we do. So there's not a whole lot of policy space and room left to cut rates. And I think one of the lessons that we've learned, right, is that there will be shocks that we never anticipated that will come along, and that it's important, again, to maintain the policy space to try to handle those things.
You said that 1.5 is already low. We had Nomura coming out to say that given the current situation in the economy, terminal rate should be below 1%. What would force you, under what circumstances, I suppose, should rates go below 1%? What needs to happen? A
material deterioration in the outlook. As I mentioned, we're outlook dependent, right? So if we see a material deterioration in the outlook, then that would warrant further rate cuts. And again, I have to emphasize that we have what we call a flexible inflation targeting framework. So we don't look just at the GDP numbers, but we also look at what's happening with on the financial stability front. We have very, very high debt, so that's always another issue. And also, what's happening with the inflation outturns. So we take those 3 things into consideration when setting our rates.
Throughout your time, you resisted calls to cut rates further. Given where we are right now, with greater clarity on where inflation is, inflation has been pretty benign. Should you have cut more? Should you have cut earlier to ensure that growth is actually better than where it is today?
One can always argue about, whether at the margin you should have cut 25 basis points here or there, sooner, later, slower, whatever. But broad picture, broad strokes, I think we're ballpark. We're roughly where we need to be.
That's the Bank of Thailand governor speaking exclusively with Bloomberg Insight anchor Haslinda Amin. We have more ahead on the Asia trade. This is Bloomberg. Bloomberg has learned that Apple's planning to launch its own AI-powered web search tool next year, stepping up competition with OpenAI and Perplexity. Sources say it'll be integrated into the Siri voice assistant. Global Tech Senior Executive Editor Tom Giles has more on the scoop. So, Tom, tell us a bit more about this technology and how many resources Apple's putting into it.
Yeah, well, this is something Apple is taking very seriously. As you'll recall, we and others have reported on the fact that Apple is behind some of its main peers in the tech industry when it comes to integrating generative AI into its tools, into its smartphone, into other devices and software that it provides. It's fallen very, very far behind, and it needs to play catch up. This would be a key way of integrating generative AI, an ability to use this Siri voice search system to ask more complicated questions, not just about what's the weather like today, but more in-depth, the kinds of things that we go to ChatGPT, for example, to do, or that we might use Claude or other generative AI chatbots to do. This would be a huge leap forward for them. The ideas that would be introduced in the spring of next year, they've been working hard on this. They have a lot of teams working on it. And it's really imperative that Apple get to a place where it's seen as a leader in this space. It would use a partnership with Google. It would rely on Google's formidable AI tools to really enhance where Siri is. Remember, Siri was introduced in 2011. At the time, it was really seen as groundbreaking. But over the years, it has become less effective.
Can you just quickly also give us a bit more color on Apple is widely seen as lagging behind in AI, as you say, behind competitors. To the extent this is going to move the needle.
Yeah, what this will do is at the beginning, it will be used in Siri, which is one of the main generative AI tools that's available to you in the iOS software system. It's the thing that you speak into when you ask for information. Again, at one point, that was really seen as forward-looking, very advanced, and since then, it's really been it's been lapped by the kinds of tools that we see from other big platforms, both here in the U.S. and there in Asia. Yes. Yeah, this would be a way to play catch-up. Thank you.
Okay, Global Tech Senior Executive Editor Tom Giles there with the latest on Apple's push into wedding Siri with AI. We've got more ahead on the Asia trade. Stay with us. This is Bloomberg. All right, we're 30 minutes away from the Open here in Australia, also Japan and Korea. Looks like it's going to be a modestly risk-on day. We're seeing Nikkei futures now ticking up a little bit more, with a bit more conviction, up by about 0.4%. Of course, weak jobs data out of the US, really helping to lock in expectations of Fed easing later this month. Be an interesting day in Japan, though. We do have a 30-year bond auction on Wednesday. The 30-year yield in Japan hit a fresh record, 3.285. And these rising yields at the long end, putting a bit of pressure around Asian banking stocks as well. Avril.
Yeah, Paul, we're live from the Goldman Sachs Asia Leaders Conference for a second day. Let's get insights on stocks with my next guest, Tim Moe, Chief APAC Regional Equity Strategist at Goldman Sachs. Always good to see you, Tim.
It's wonderful to be here, and thanks for having me on the sidelines of our conference today.
Of course. Okay, let's start with what seems to be on a lot of investors' minds, the curve steepening. How is that likely to affect Asia stocks, you think?
Well, generally, a steeper yield curve is better for stocks. And in particular, what matters is the way that the yield curve steepens. And what we're expecting is a so-called bull steepening, which means that the short end of the curve goes down. So you basically have the curve steepening, but because rates are getting lower at the short end of the curve. We've done some statistical work on this, and what we can see is that when you've got lower short U.S. rates, short-end U.S. rates, which of course we expect with the upcoming Fed meeting, we think the Fed will start cutting again, and we think there'll be 3 cuts this year and then 2 more in each quarter next year. That combined with a softer dollar, which we think will be the result in part of U.S. rates coming down more than Asian rates, is typically a favorable backdrop for Asian stocks, particularly for markets like Korea, Taiwan, Hong Kong, and the Philippines.
What about Japan, though? We saw how those banks really got hammered yesterday. How bad is the march higher in global DM yields on the long end potentially going to be for their bond books?
Typically, well, I want to break that down into 2 bits. So higher rates in Japan should be good for the banks. In fact, that's one of the reasons why we do like banks. Because obviously when rates are or at the very low levels that they were under yield curve control, then the bank's earnings and margins were very, very compressed. So when you've got rates rising from a low absolute level, and you also have a steepening of the yield curve, that's typically a very, very favorable environment for banks. That's the reason why banks have done well. I think with regard to the steepening of the long end of the curve, then there's some concerns about, are there signals there about Japan's fiscal ability to repay its large amount of borrowing, which is about 400% debt to GDP. And so I think that has taken some of the edge off the banks, which had done well previously. So I think it's a bit of a reason for banks to have some profit taking. But overall, we still are favorable on the Japanese banks.
Do you see this as potentially a risk for markets that are more bank heavy, such as Australia?
Generally, yes. I mean, so we're more cautious on banks. If you look at our sector allocations, we generally are more in favor of, for example, the technology space, which obviously plays into the AI theme and so forth, some of the deeper cyclicals, and also some of the more defensive stocks that have higher yields. That's generally been how we're deployed. In the environment that we're expecting where short-end rates are coming down, that's generally not as favorable for banks. And then if you unpack that, you see that some of the indices that are very bank heavy, like Indonesia, where the banking sector is over 60% of the MSCI Indonesia index, tight liquidity domestically, as well as the rate environment that I just described, is typically not good for their profitability. And so if you've got a constraint on profitability for the banks there, and they're 60% of the index, that generally puts some weight on the index overall. So we're underweight Indonesia, in part as a consequence of that.
Just picking up your point there, Indonesia also in the past week seems to be reflecting these other risks, a reminder of the risks in the EMs. How do you view that market overall?
Well, as I said, we've been underweight there, and obviously there's been political tension and demonstrations and so forth, which have been weighing on the market. We actually think from a fixed income standpoint, a good deal of that is priced, and if things calm down as they appear to be doing, then there is some opportunity to receive rates, which basically means to take a more constructive view on fixed income. But still, when we stack Indonesia up against the rest of the region, in terms of earnings growth and uncertainty about domestic environment, we think there are better alternatives, particularly in North Asia, where we're overweight China, both A&H, overweight Korea, and overweight Japan. And I would note that those 3 markets have done particularly well this year. The spread between them and some of the poor performing markets, which includes Indonesia, which is now the worst performing market in the region, is over 40 percentage points this year, which is double what the 16-17% return on the MSCI index is year to date.
And you see further room to run on the liquidity-driven rally on the mainland?
Yes, we do.
How much more?
Well, we just raised our CSI 300 target from 4,500 to 4,900, and that's about low to mid-teens upside from here, even after gaining 11% in the last month and 17% year to date. And we've had a lot of questions with investors, particularly about our conference here, our Asian Leader Conference, regarding, is the liquidity run, has it gone too far? We have a tool we've developed, which is a retail sentiment barometer, which includes 11 to 15 different indicators, all about how liquidity and retail sentiment is performing onshore. And that suggests that, yes, retail sentiment has elevated, but it's nowhere near the extremes that we saw, for example, 10 years ago in 2015, or even in some of the recent spikes in the market. So we still think that the market's not overextended here and is further to run.
Is it also partly to do with how policy risk in China has been compressed, and perhaps partly to do with how the Chinese leadership, the optics surrounding the stock market? Do you think that is also potentially a driver here?
That's very much part of an input to our thought process. I mean, for example, when Xi Jinping met in February with all the tech leaders, that clearly signaled a shift in terms of the perhaps more repressive attitude towards private enterprises. We did a big series of reports a month or so ago, basically calling for the sort of rejuvenation of the private-owned sector, which is obviously is dominated in market cap terms by many of the tech companies. We really very much like these. We have a group of stocks we call the Prominent 10, which we very much favor. And that is part of our constructive view, particularly on China H shares, the offshore stocks.
What about the policy risk that's coming out of the U.S.? We've seen in the past week, for those Chinese waivers for the chip names in Asia, they're getting revoked. How big of a risk are you seeing?
Well, I mean, this is part of the more fraught geopolitical backdrop that we find ourselves in. And one of the ways that we find to translate that backdrop of elevated tension globally is to favor the defense spending theme. This is a theme that we've liked for well over 2 years. It's now more popular. It's done very, very well. We have two baskets on this. It's a core Asia defense and aerospace basket, as well as the defense supply chain. And those are up 40 to 50% this year. So we very much like this theme, think it's a long-term, 5-year, 10-year structural trend. Short-term, it might be a little bit overextended. But in the longer run, we think that it's a theme to remain engaged in.
Short-term overall in the region, we've also seen Asia ex-Japan, how they've climbed from the April lows. Should we be bracing for some form of a correction? If so, when?
Well, thanks for asking the question, because we just introduced a new tool we call RADAR, which stands for Regional Asia Drawdown Risk Model. And it basically is a probabilistic regression model that assesses whether there might be some risk of a pullback in markets of varying degrees. And the punchline is that after the market, as you just said, the broader regional index has rallied over 30% from the April lows without any meaningful pullback, just not even 5%, just 2-3% pullback at the max, and various momentum indicators being a bit stretched, and also valuations going from over a standard deviation cheap to a standard deviation rich. We think that the markets are probably overdue some sort of a digestion of those gains. Typically, September is a weak month, the weakest month of the year. So if you put all that together, it says there might be a risk of a bit of an air pocket in markets. But then we think that would allow investors to set up for what's typically a stronger fourth quarter. So our call here is the markets have done very well. They might pull back a little bit here to varying degrees. Korea's already pulled back about 5% or so. And then we think it sets us up for a good run into the end of the year.
Okay, so watch the month of September. How should we be hedging?
Well, we had some suggestions. Not all investors can do this, but if you look at volatility, that's gone down, the implied volatility for derivative contracts or derivative instruments. So whether it's in the form of a short-dated put or maybe a put spread, we think that is a sort of tactical way as an overlay for investors who can do that to protect some of the downside risk in their portfolio, stay engaged, and be able to position into what we think will be a better fourth quarter run for the end of the year.
Tim, always a pleasure, always amazing. Great to have your insights.
Thank you so much.
Thank you so much. Tim Moe is Chief APAC Regional Equities Strategist at Goldman Sachs. And we'll have more exclusive interviews from Goldman Sachs' inaugural Asia Leaders Conference ahead. Meitu CFO unpacks the outlook for China's AI sector. Polysilicon producer Daqo New Energy joins us amid a solar price war on the mainland. And we'll be speaking about aviation and business strategy with Qatar Airways. More ahead on the Asia trade. This is Bloomberg.
Right, let's check in on how Japan assets are tracking. Looks like it's going to be a modestly risk-on day for the Nikkei, up by about a third of 1% right now in terms of futures. Not surprising because we did have weak jobs data out of the US, which suggests Fed easing later this month, pretty much locked in. We've got a very weak yen, however, against a somewhat tumultuous political backdrop. We'll discuss that in a moment. And also watch out for longer dated deals today. Another test for the bond market in Japan with a 30-year auction and the 30-year yield touching a fresh record on Wednesday. Well, let's talk a little bit more about how Japanese political developments are impacting markets. Let's bring in the Bloomberg reporter Yoshiaki Nohara, who joins us now from Tokyo. So Yoshiaki, we've had a number of resignations and offers to resign from Prime Minister Ishiba's inner circle. How's his status looking this week? Is he any safer or less safe in his job than he was a week ago?
So the situation is that it remains very tenuous, meaning that the Prime Minister pretty much missed a moment to put an end to all ongoing criticism to seeking him to take responsibility for the election loss. So what's coming up next is the next Monday, September 8th, is a big day for Japanese politics when the ruling Liberal Democratic Party will decide whether to call for emergency leadership contest. And if that happens, that obviously the Ishiba's rivals will likely to raise hands, and Prime Minister may, decide. Well, he said he will make a decision at the appropriate time, but he didn't indicate whether he's going to run for the leadership contest again if it's held, but it just remains so tenuous at this point.
Yoshiaki, the Japanese trade negotiator is also headed to the U.S. We're hearing how Trump says if courts in the U.S. rule his tariffs illegal, that could put trade agreements at risk. How much more complicated does this make the job for Akazawa?
I think what trade negotiator Akazawa has been doing is that he's aware of the court development in the U.S., but he's not trying to interfere much with that aspect because it's what's happening within the U.S. system. So he doesn't want to be seen as interfering with the U.S. matters. But what he's focusing on is just to strongly urge the U.S. to start cutting car tariffs as promised in the July 22nd deal. And for that to happen, the U.S. is obviously wants investment coming in via this investment mechanism that they agreed as part of the deal. So the question is that whether the two sides are coming together, reaching a point where they feel that they are getting what they want at the same time.
Yoshiaki, thanks so much for breaking it all down for us. Bloomberg reporter Yoshiaki Nohara. Now, we've also been seeing the yen under pressure amid the political uncertainty in Tokyo. Japanese banks also in focus at the open of stock market trading as investors worry about their bond holdings. And all this as we monitor the long end of global bond markets and look ahead to the 30-year JGB auction later today. Let's get to Tokyo and our Japan FX and rates reporter, Mia Glass. So, Mia, what are investors expecting out of the 30-year today?
Yeah, investors are very cautious going into the 30-year bond auction today. So earlier in the week, we saw a 10-year auction actually see surprisingly good results. So that gave investors a bit of a temporary sigh of relief. Yields dipped on that result. But then we had the global bond sell-off this week, and it eased a bit overnight, but it sent Japan yields to those multi-year highs once again, especially in the longer-term sector. And then, of course, we also have all of the political uncertainty over Prime Minister Ishiba's future and the fiscal risks there. So all of these are not really great signs heading into the 30-year auction. One positive aspect that we do have for the longer end is that Japan's Ministry of Finance asked primary dealers last week for their views on reducing issuance again in the longer-term sector, particularly for the enhanced liquidity auctions. And so that's one good news for investors, but I still think it will be a nerve-wracking event for investors. If we get a weak result, it could pressure that long end of the curve again. It could even weaken the yen. So we'll definitely be watching the demand measures today.
We've seen banking stocks sliding on the topics in Japan as well. What are the risks for banks here from these rising yields at the long end?
Yeah, well, we can definitely see the impact on the banking stocks. I think for that, it's really important to look at what the Bank of Japan is going to do. So this week we had the Deputy Governor Himino talk to about the Bank of Japan's rate hike path, and he didn't really give any hints. He was very cautious. You know, the Bank of Japan is still seeing uncertainty from tariffs. They're not really sure when they're going to hike, so that's really weighing on those banking stocks. It's also obviously impacting the yen, which saw its weakest level in a month this week, as well as the yield. So the Bank of Japan's rate hike path is definitely something to watch from here.
Yeah, you mentioned the yen there. When can we say that the floor is in? How much more weakness is possible?
Yeah, so the yen is kind of hovering around that 148 level. It's really approaching that 200-day moving average right now. And if it crosses that level, a lot of investors I'm talking to are saying that we could even see that 150 level, which is definitely a key psychological level for investors. I think what really is important is also the Fed's path from here. So overnight, you know, we saw the JOLTS data come in a bit weak, and that led to a bit of a weaker dollar. And of course, the payrolls on Friday will be really important to watch. So the Fed's path and the BOJ's path will definitely be important for the yen from here.
Mia, thank you so much. Our Japan FX and rates reporter, Mia Glass there. We'll have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at how commodities are tracking. Iron ore doing pretty well, holding on above that $100 level. Gold, of course, very much in focus. Touched another fresh record on Wednesday, right now 3,558. Goldman Sachs saying their tail risk scenario could see gold go all the way up to 4,500 an ounce. Some pretty bad outcomes are happening if we get there, but situation very constructive for gold at the moment. The Fed, of course, due to ease in a couple of weeks. Markets are pretty much pricing that in as a certainty. Crude prices, meanwhile, softening a little, 63.80 for New York crude at the moment. We do have an OPEC Plus meeting this weekend where October supply is going to be determined. There was no expectation that there'd be any change to production, but there is a report from Reuters that a fresh round of production increases may be considered. Output was raised by about 400,000 barrels a day back in August. Petrobas, meanwhile, says there is a lot of demand for their products in Asia, which puts it in a favourable position to withstand the US trade war. Speaking to Bloomberg, CEO Magna Chambrade says India, for example, is open to buying any product that Petrobas can export to the country.
No caso da Petrobras, a gente exporta muito pouco para os Estados Unidos. In the case of Petrobras, we export very little to the United States. So even if we were reached by this 50%, our export would be easily directed. We have India, China, Asia, they all demand a lot of our products, so we wouldn't be very difficult to remanage. But we export to the United States, we like these exports, and we buy a lot of things from the United States as well, and we're going to continue doing it.
When you look at the global landscape, the president has also put high tariffs on India, trying to pressure them to stop buying crude from Russia. Could that be an opportunity for more Petrobras exports?
Sim, nós exportamos. A India, por exemplo,
well, India, for example, it introduces itself into Petrobras as a procurer of any product that we want to export there, as a buyer. You know, so we usually say, no, the Indians say, you are increasing your oil production, your production of derivatives, and anything that you want to export more, we will buy. You know, Asia as a whole also buys from us. We export, for example, a bunker with 24% of renewables to Asia. And every ship, every vessel that we send to Asia sells a lot, you know, with high percentages. And so we keep looking at that and looking at this industry.
that is going to continue being relevant for the next 2-3 decades. This is what we believe. So, and at the same time, we need to ensure that energy transition needs to take place in Brazil, and that we need to be part of that, and we need to deliver to that as well.
Oil products were exempt from a lot of these tariffs, but have you seen an impact on the supply chain? Have costs gone up? Have projects been delayed?
Supply chain tem sido uma questão, sim. Supply chain has been an issue. For example, we had goods that are not shelf goods, and these goods need to be requested in advance in several of our projects, and we have seen some delays in delivery. So, for example, things that we expected to ensure 2 years for delivery times are reaching like 3 years. So this impacts some of our products as well. But I think that Petrobras needs to anticipate with itself with regard to these demands, so that we can be more and more agile for the market.
Petrobas CEO Magda Chambriard speaking there to Bloomberg's Amory Ordern in Sao Paulo. Staying on India, the Indian government is lowering nationwide consumption tax. This is as policymakers step up efforts to boost local demand. It also comes as India is grappling with steep tariffs imposed by the United States. Taxes will be cut on most items of everyday use, premiums on insurance policies and vehicles. And those new rates are going to come into effect from September the 22nd. Prime Minister Narendra Modi says the policy shift will improve the lives of citizens. Stay with us. Market opens in Sydney, Seoul and Tokyo up next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens, and Avril, looks like we could be setting up for a risk on day to day. Some pretty weak jobs numbers for the Fed to ponder. More jobs numbers coming out this week, but the market for now deciding, well, we're going to get easing from the Fed later this month.
Well, it's also interesting how the U.S. stock bounce was pretty concentrated in tech. So is that a risk as well? You got to wonder as we set up for the Asian trading day, Paul.
Yeah, and there will be a lot of focus also in Japan today. Another test of the bond market demand there. A 30-year auction. This week's 10-year auction went pretty well, but today's longer-dated notes, we got the 30-year at a fresh record yield of 3.285%. So let's see how that goes. In the meantime, we got the market opening like this. A little bit of weakness for the Nikkei. Nope, that flipped around pretty quickly. A little bit of risk-on sentiment as we were expecting. The topics pushing higher as well. And we have been watching some of those banking stocks on the topics also. They've been getting a little bit softer as yields on the long end have been rising. Also in Asia today, we're going to get a rate decision in Malaysia. Not expecting any change there to the cash rate at 2.75%. The yen strengthening just a tiny bit, back with a 147 handle. Of course, Japan also grappling with a fair bit of political upheaval at the moment. Let's take a look at how we're tracking in South Korea at the moment as well. We've got the Kospi looking a little bit, let me just take a look here, a little bit stronger also, better by about 1/5%. We had trade numbers out of South Korea earlier as well. We neglected to mention those, but they weren't too shocking. A slight narrowing in the trade surplus there to around about $10.7 billion for the month of July. That is the current account balance. We're seeing a reasonable bid on the Kosdaq as well, better by 1/3%. The Korean won looking fairly flat. Take a look at treasuries, how they're trading as well. We did see the 30-year yield almost touching 5% during the US session. It's backing off a little bit now. We've had a bit of mixed language in terms of Fed speakers. We heard from Chris Waller saying lower rates in September and multiple cuts to come in the coming months. Raphael Bostic backing that language off a bit, saying one cut is appropriate for this year. Alberto Muslim, meanwhile, saying borrowing costs are well positioned. So a little bit of disagreement among some Fed members about what's going to be coming next. Avril.
Yeah, let's get some analysis with Audrey Go, Head of Asset Allocation at Standard Chartered Wealth Management Group. So, Audrey, good to see you. Let's start off by what we're seeing in the long end on bonds and this debate that is underway. Is this bull or bear steepening, and how much further are we going to see on this?
Well, thanks for having me. I think we expect the long end to remain reasonably well anchored. So if you look at the range that we're looking at for the US 30-year Treasury bond yields, we are looking at the range of between, say, 4.8 to around 5.1%. And if we look at the latest jobs opening data that were released overnight as well, we have basically continued to see continued moderation in jobs market, where the number of vacancies which is available has dropped to a 10-month low. And we've also seen the vacancy to unemployment ratio, for example, drop below 1 for the first time since 2021. So what this means is now there are more unemployed workers than there are vacancies. And to us, that's likely to continue to weigh on bond yields over a longer term basis, notwithstanding that we are seeing some short-term spike at the moment in terms of the long end where the Treasury yield is concerned.
What is all this going to mean for the dollar, Audrey?
So for the dollar-wise, I think we wouldn't be surprised if there were to be some mild strengthening in the dollar in the very short term because of concern over fiscal risk, fiscal pressure among major central banks, not just in the US but globally in the euro area as well. But I think again over a 6 to 12 months horizon, given that the Fed we're expecting them to deliver rate cuts starting in September again, and maybe another 2 to 3 rate cuts for the next 12 months or so, we do expect that to likely to add pressure in terms of the dollar, for dollar to be biased on a weaker trajectory over a 12-month horizon. But again, net, we're not looking for massive weakening because economic data is still holding up reasonably well. And if you were to look at US economic surprises, those are largely neutral, right? But still in a reasonably positive territory. So no major shift from a dollar perspective, and really our advice to investors is to trade the range in terms of bond yield where it comes to bond investors, and then from a dollar as well, largely range bound as well, maybe with a slight weakening bias.
In spite of the relative dollar weakness we are seeing, the yen can't seem to catch a break. What is your sense of where we go from here?
I think the EOG needs to strike a very delicate balance because on one hand, if we look at economic data, Japanese inflation is clearly above the 2% target, closer to 3%, over 3% actually. Prices are quite sticky, wages are also improving. So they are clearly pressed in terms of the need to normalize the monetary policy. But at the same time, with all the uncertainty with regards to bond yields, especially at the long end, as well as trade tensions with the US as well, I think they need to strike a relatively balancing act in terms of not unrattling the market. So for now, we are expecting them to largely stay pat in the upcoming September policy meeting. But over the next 1 year horizon, we are biased to believe that they will be likely to continue hiking interest rate, maybe delivering 1 rate hike or maybe even 2 over the next 12 months horizon.
Audrey, a lot of asset prices are looking fairly elevated at the moment. Where are you adding to positions?
So for US, it remains a core holding for us. But given that the US equity markets have also scaled new high together with global equities, we are biased to believe that the markets are probably due for consolidation as it stands for now. And if there were to be any pullback in equity market, we prefer to add within the Asia ex-Japan region, and also the China as well. And China equities have also been doing quite well, being one of the better performers year to date as well. But if you compare the valuations between China as well as Asia relative to global equities, they still trade at a relative discount and also buffeted or supported by tailwinds from our bias from a weaker US dollar and potentially moderate, slightly lower in terms of bond yields or range bound in terms of bond yields. And those are the factors that tend to be quite supportive where Asian markets, China equities are concerned, given a weaker dollar tailwind, which also allows central banks in this part of the world to really think about easing policies to continue to support and cushion the economy as well.
Yeah, let's talk a little bit more about Chinese equities because we're seeing very strong buying. We're also seeing record borrowing to fuel purchases, and opinion seems to be somewhat divided on how sustainable the rally is. How do you view things?
So we are more constructive on Chinese equities. In fact, policy tailwinds aside, we're also seeing some improvement in corporate earnings. And I think importantly, I think we have seen some shift in sentiment on ground, where consumers, households are starting to maybe take up their maturing deposits or cash holdings and starting to really deploy them into the equity markets, which is really unseen over the last maybe 3 years or so, given the really poor sentiment around that. So on the back of that, we have actually seen an increase in accounts opening in brokerages in China. We have also started to see some decline in cash deposits within the bank as well. And those are also signs that tells us that some of these liquidity momentum related trade in China can continue. But obviously, I think short term they are a little overbought. So our preference here is really for investors to really look to enter them on pullback. And valuations have also risen to about maybe above average, 1 days above their 5-year average as well. So net wait for a pullback before re-entering into the market.
Audrey, what are some of the risks that you think at this point markets are underappreciating?
I think for one will be, I think key will be maybe another flare-up in trade tension, because I think people are expecting Daqo to persist. And I think that in itself is quite unpredictable, because we wouldn't know what might be some of the new policy developments or rhetorics that may be up from the Trump administration. So that's one key risk that I think people may be underappreciating. And second of all is, of course, inflation then. And we've also recently seen a break higher in terms of gold price as well. And clearly from an asset allocation perspective, for our advice to investors is, given these risks, which are still quite abound out there, we would also hold a core allocation to gold, which is one of the key diversifier for portfolios.
Before we let you go, Audrey, I just want to get your thoughts also on some of the assaults that we've seen on Fed independence. We've heard from a number of voices today. The former Treasury Secretary Larry Summers warning of a credibility crisis, even the governors of the Bank of Thailand and Bank of England weighing in on this as well. But at what point do you see the markets start to worry about this? Where's the timeline and the threshold for the same sort of tantrum that we saw over US trade policy?
I think if we were to see even more Trump nominee into the Federal Reserve Governor Board, I think that might be a key risk for the market to maybe decidedly turn more worrisome on Fed independence. I think for now, it is a risk that is lurking in the background. But overall, setup of the board is still reasonably, I would say, independent. But of course, subject to who the new nominees may be, and also whether Trump may be successful in removing, Governor Cook from the council as well. So that's really quite a key development for investors to be watching. But for now, it seems that investors seems to be, shrugging that off and seeing that as a background risk more than a key significant risk for asset prices.
All right, Audrey Goh, Head of Asset Allocation at Standard Chartered Wealth Management Group. Thanks so much for joining us. Let's take a look at how we're tracking in Australia. Meanwhile, it's a risk-on day for Australian stocks as well. Right now, better by about 2/3%. The heavyweight financial sector performing pretty well, particularly considering some of the interesting moves we've seen towards the longer end of the curve for a lot of bonds at the moment. Financial sector up by 1.23%, and the materials sector performing pretty well. Also, Australian gold miners catching a bid. Got the Aussie 10-year not really moving as violently as some of those longer dated bonds elsewhere, just off by about 4 basis points at the moment. Also want to check in on Nidec as well. This is a stock that is not trading in Japan at the moment. Nidec's ADRs are falling also on the possibility of an internal probe. Avril.
Yeah, still to come on the program, Paul, our exclusive interview with Meitu CFO about the company's AI strategy right here at the Goldman Sachs Asia Leaders Conference. This is Bloomberg. Watching the Asia trade. Now China is accelerating its AI rollout, embedding smart technology into everything from electronics to everyday consumer platforms. One company involved in the convergence of consumer habits and AI is Chinese image editing app Meitu. It has 280 million monthly active users globally, with about a third of that from outside mainland China. Its CFO Gary Ngan joins me exclusively now at the Goldman Sachs Asia Leaders Conference. Very nice to see you, Gary.
See you.
So talk to us about this fast evolving landscape first. What are consumers hooked on? What do they like? And how does this differ according to markets?
Yeah, so I think generally speaking, we, especially in China, and it's broadening overseas, that people are sharing a lot on social media, and there's a lot of things that they actually want to add. It's not just the facial expressions, but also sometimes you want to remove random people on the streets. You want to change the lighting. Sometimes you did not have the right lighting. You want the AI to help you to add a flashlight effect to it. So there's a lot of things that AIs can do, simply because the technology is ready. The habits of sharing on social media is continue to grow.
So does that differ according to which market? For example, in Japan, they have certain preferences for anime sort of content versus what you're seeing on the mainland. And how is that going to inform your overseas presence?
Sure. So I think in general, there are some common needs among users. For example, one of the needs is AI removal. That's very common. It's across different jurisdictions. Flashlight effect also. For example, we had launched this AI flashlight effect that was very, very popular in among European users. But obviously, there's also some aesthetic different standards or trends in different countries. So our operations team and product management team will actually go into very deep into different countries to understand what are the differences, the trends, and we create effects and products according to those trends.
And how closely are you watching what competitors are doing and what's come out in the market recently?
I think we less focused on what competitors are doing, partly because number one, we are already the market leader, and the other thing is as a philosophy.
But some of the products that have come out in the past week have really captured a lot of attention online.
Yes. But I think what we are trying to do more as a company philosophy is to focus on what user wants, what are the demands, what are the demands that are sometimes apparent but sometimes also latent. So we try to understand our users more, focus on serving them as opposed to looking at what competitors are doing.
Right. So how is that going to shape future business development at the company?
Sure. So I think if you look back in the history of our company, we focus more on the social apps or for leisure app, i.e. the apps that help users to post better photos on social media. But during 2023, with the advent of generative AI, we actually started to go into productivity. So we are helping e-commerce sellers to create better marketing materials. We're helping podcast video or talking video influencers to make better videos using AI. Just for example, we help them to edit the video without actually going through the timeline. You can just edit on the script itself, and the AI will generate the video for you. So you don't actually have to go back into, reread the whole video to edit things like that. So we're doing a lot of productivity stuff.
You talked about some of that tie-up partnership with e-commerce platforms, Alibaba. Its unit is among your partners.
Yes.
How complementary has that relationship been so far?
Sure. So I think we announced the transaction end of May. It's still very early days, but we are already working very closely. So we have a few different fronts in terms of cooperation. For example, in China and some of the other overseas countries who are using their cloud services. We are also working very closely with their LLM model team, and we are also have recently launched a AI try-on app that actually is co-developed with Alibaba. So you can actually take a set of clothes use an AI try-on. If you like it, you can actually buy directly from Taobao and Tmall.
So are you looking for more such tie-ups or investments? Is that on the cards for Meitu?
Yeah, I think investment aside, I think cooperation, it's definitely going to be very important for us. And we're looking to expand more in terms of cooperations.
What is your projection for subscriber numbers, monthly active users for this half and into the next half of the year?
Sure. Without going into specific numbers, I can say that in the recent 1 to 2 years, our subscriber numbers the paying subscriber numbers have been accelerating in terms of growth. I think partly because generative AI has helped us to create a lot more exciting features. And also, one other thing is people are very willing to share. For example, we have recently launched a AI clothes changing. So basically, you can test on different clothes, and then just with one photo, and then the background and your face will not be changed. It's just you changing your outfit. That has generated millions of new downloads in Asia, and I think people are very willing to share that on social media. That drives up the paying subscriber growth.
How important will the overseas presence be for the business? Because now I think your MAUs, about a third of that is coming from outside mainland China. Is that something you're looking to build up as a priority?
Yes. So I think internationalization has always been one of our strategy. And we are now expanding our offices in Sydney and the West Coast. And especially in productivity, I think this is a market where it could be 5 to 10 times bigger than the social market for image and video editing apps.
Gary, thank you for coming on and sharing some of the plans for your business with us. Nice to chat with you. Gary Ngan is CFO at Meitu. We'll have more ahead on the Asia trade. This is Bloomberg. President Trump says the U.S. could increase its troop presence in Poland and indicated that more financial penalties targeting Russia could be implemented in the coming days. His remarks come as he prepares to speak with Ukrainian President Volodymyr Zelensky and European leaders. Earlier this week, Trump, in a radio interview, also said he was very disappointed in Russian leader Vladimir Putin as peace talks between Moscow and Kyiv stalled.
I have no message to President Putin. He knows where I stand, and he'll make a decision one way or the other. Whatever his decision is, we'll either be happy about it or unhappy. And if we're unhappy about it, you'll see things happen.
Well, President Trump has suggested the trade agreement struck with economies, including Japan, South Korea, as well as others, could be a risk, and that's if his global tariffs are ultimately ruled illegal by U.S. courts. Let's bring in Bloomberg's Asia-Pacific economy reporter, Swati Pandey now. So, Swati, what are the implications for countries that may have trade deals, which now could be voided? And I'm thinking particularly, how long can some other countries, such as India, endure these crippling U.S. tariffs?
Look, in some ways, it may come as a relief to some of these countries. Of course, a lot of time and energy has got into making all these negotiations, but they have not necessarily been in favor of these countries. It does add to that layer of uncertainty, which already has clouded economic outlook. It does inject fresh doubt over trillions of dollars of global commerce. And, people still don't know if tariffs would be lifted, replaced, or renegotiated. So it's not necessarily a good outcome, but maybe if the court rules against it, then there probably may be a bit of a sigh of relief there.
Swati, we've also been tracking how some of these economies are adjusting to help maybe consumption, to buffer the impact from tariffs. We've seen India cutting their consumption tax. How significant is this?
Look, India's move is quite significant. because it is a simplification of the tax regime. It's also lowering the consumption tax and trying to rebalance demand to domestic growth from external growth, where there are a lot of headwinds at the moment. It is going to be a hit for government revenue. So the government is estimating roughly 500 billion rupees of revenue loss from this move. However, the cut in consumption tax should give more money in the hands of ordinary Indians, and that should boost consumption and should spur growth. And there's also expectation that it would lower inflation, and probably that would mean more interest rate cuts, which will further stimulate the economy. So ultimately, the economy should get a boost from it. The reform won't change anything overnight, but over the long term, it is certainly a good move.
All right, Bloomberg's Asia-Pacific economy reporter Swati Pandey there. And it's interesting as well that this is not a broad-based cut, but some things are going to be taxed more than others. Sin purchases like alcohol and cigarettes would attract a higher tax as well. There you see how we're tracking in terms of markets at the moment. Modestly risk-on sentiment across the Asia-Pacific. We'll bring you more in a moment on the Asia Trade. This is Bloomberg. Got a modest risk-on sentiment across Asia-Pacific equity markets at the moment. All of those major indexes in positive territory. The Nikkei doing particularly well, better by more than 1%. Of course, soft jobs data out of the US really fueling bets that this idea of a Fed cut in about 2 weeks' time pretty much baked in. The Kospi moving higher as well. Here in Australia, we're better by 0.7%. One key thing we're looking out for later today is the 30-year bond auction in Japan. So another test of the appetite for some of those longer-dated notes. President Trump, meanwhile, says his Chinese counterpart should have acknowledged the US during his speech at Beijing's military parade on Wednesday.
I watched the speech last night. President Xi's a friend of mine, but I thought that the United States should have been mentioned last night during that speech because we helped China very, very much.
Well, that event showcased China's military strength and global ambitions as well. Our chief North Asia correspondent Stephen Engel joins us now from Beijing. Steve, so many takeaways from that event yesterday. It was quite spectacular, and also we were treated to the rare image of Presidents Xi, Putin and Kim of North Korea all walking along together and sharing an interesting moment on hot mic. Never mind term limits.
Yeah.
Why not just live forever, right?
Yeah, I think that's going to be the one key takeaway from this. Never mind all the military hardware that was running down Chang'an-jie there between Tiananmen Square and the Forbidden City. The optics of these three gentlemen here, Putin, Xi Jinping, and Kim Jong-un together walking through the Forbidden City and then up on top of the Tiananmen Gate watching the parade is what we're all going to remember. Three, let's face it, the more authoritarian leaders standing up to the U.S.-led the Western U.S.-led world order, of course. And Donald Trump, I might add, initially congratulated Xi Jinping for holding the parade. But again, after listening to his speech, was a bit taken aback that Xi Jinping did not mention the United States. Well, keep in mind, dating back a couple of days to the SCO meeting in Tianjin, followed up by this parade, all of it was a bit of a veiled counter to the U.S.-led world order. Not since the Cold War in 1959 have the leaders of these three nations, China, Russia, also, of course, the Soviet Union back then, and North Korea, have stepped out together. That was Mao, Khrushchev, and Kim Il-sung. So again, now Trump, on one breath congratulating Xi for the parade, he's also said Xi was conspiring against the United States. So again, the optics showed one thing, the message said one thing. and I think we just move on from the parade now.
We're still continuing to unpack some of the noticeable absences, though, from the parade and who was not present. Does this give us a sense also from the PLA? Is the purge widening there?
Well, we do know that Xi Jinping has either removed or put under investigation at least 14 generals since he took power in 2012, 2013, more than any that Jiang Zemin and Hu Jintao ever did. So there has been an ongoing sort of disciplinary purge of the ranks. Tigers and flies is what he said many years ago, that he would go after the rank and file soldiers as well as any general who is perceived to be violating, codes of conduct and various different codes of conduct, from corruption to bad etiquette, obviously. So what we read from yesterday is the vice chairman of the Central Military Commission, who has not been seen in public for quite some time, was not seen yesterday. That's He Weidong. But we also know that Xi Jinping has gotten rid of at least 2 defense ministers, including Li Shangfu, senior admiral for the Navy, Miao Hua, the rocket force commander, Li Yuchao, and now even, and we can roll this video of Xi Jinping riding down Chang'an in the Hongqi limousine. Just before he addresses the troops, he is introduced and welcomed to address the troops by usually the head of the Central Command, the top general. But yesterday, and that's why people are kind of wondering whether another general has been caught up in this dragnet, if you will. General Wang Qiang is the Central Theater commander. He did not introduce Xi Jinping. It was a lieutenant general who did the honors. So again, military observers and China watchers are saying, does this reflect yet another purge or another investigation within the ranks of the People's Liberation Army? It's speculative, because keep in mind, the transparency of the PLA is far more opaque than even the government of China.
Stephen, thank you so much for providing that context for us. Our Chief North Asia correspondent, Stephen Engel, in Beijing. Now, in the next hour, Bloomberg's Jenny Marsh, James Mager, Alistair Gale, and Colin Murphy will be hosting a live Q&A session on what Beijing's recent military parade tells us about Xi Jinping's global ambitions. Subscribers can join the session on Bloomberg.com at 9:30 a.m. Hong Kong time or 9:30 p.m. in New York. Staying with China, President Xi isn't known for prioritizing stock market returns, but Bloomberg Opinion columnist Shery thinks there are signs that this might be changing, and she joins us now. Shery, are we seeing a change of heart from the Chinese president? If so, what's prompted this?
Absolutely. What we are seeing is that those state-owned funds are pumping their billions of dollars into the stock market this year, starting from the sovereign wealth fund, Central Huijin. And then you also see pension funds, state-owned insurance companies increasing their exposure to domestic stocks. I think what's happening is that what China has seen in the last 5 years was a precipitous drop in the fertility rate. Before the pandemic in 2019, China was still producing 15 million babies every year, right? Last year it was a dragon year, and it was very auspicious for China. Not even 10 million babies were born. So going forward, we are going to see, say, like 1 new worker supporting 3 new pensioners, and that's just not sustainable. When China's demographics deteriorate worsen like this, the government has to care about the stock market performance to create wealth in the society.
So, as you say, 1 new worker supporting 3 pensioners, it's not sustainable. So how can China pay for its social security system?
It's going to be very difficult. If we look at the U.S. Example, right, the boomers are doing so well because of the soaring value of their homes and the stock market. And in China, we all know the stock market, the property market is going to be in a prolonged downturn for the next 2 or 3 decades to come. So the only leftover is basically the stock market. And what China is trying to do is to come up with some kind of a 401k system for its employed workers, workers. But as for, rural migrant workers or people who don't really have jobs, it will be very difficult. But going back, it's just like the stock market is going to be the only way to create wealth in the society.
All right, Bloomberg Opinion columnist Shery there. Let's take a look at one of the movers that we mentioned a little bit earlier. Nidec losing a lot of ground in Japan at the moment. It's now off by 20% after a late start to trading. Now, we did see its ADRs falling as well. The Japanese electronics company has announced it's set up a third-party committee that's going to investigate improper accounting. So Nidec saying, or Citigroup saying, I beg your pardon, that the veracity of this matter is unclear. But inappropriate accounting practices, the size of the impact opaque. This is going to be a negative surprise. So the market selling now, asking questions later. Nidec now off by more than 21%. Still to come, Chinese polysilicon producer Daqo New Energy is going to join us to discuss the outlook for China's solar sector amid a bruising price war. This is Bloomberg.
We're taking a closer look at China's clean energy sector now. Beijing is seen to tighten its grip on the solar supply chain, even as the industry grapples with overcapacity challenges. Daqo New Energy makes polysilicon a critical element needed in the production of solar panels. Its CFO Ming joins me exclusively now from the Goldman Sachs Asia Leaders Conference. Great to see you,
Great,
Ming.
thank you so much.
So let's start off. Really nice to see you. So let's start off with what we're seeing in the industry.
Okay.
Obviously, it's been muddled by overcapacity issues.
Yes.
Do you see a turning point coming soon? If so, when?
Okay, I think we are seeing a very clear turning point, especially after China's a meeting in July. Yeah, to address this issue, I think new policies are coming forth, and I think the industry already marked a clear bottom that is already recovering.
What is that going
currently.
to mean for your bottom line? How soon do you see that?
Improving significantly. I think we recorded a loss in the second quarter. I think fairly significant loss. But now for the third quarter, we're actually expecting significantly improved financials.
And eventually in the black as well.
Eventually in the black as well,
And
yes.
how soon did you say this was going to be?
I think within 6 months, before the end of the year, we should start to generate profitability. I think
In terms of government measures, it's also interesting because we've seen how local governments have been asked to kind of submit their assessment of the energy consumption needs of polysilicon producers. Do you see once that sort of review is done, the results are through, that you'll see more anti-involution measures from the central government?
Oh, well, we believe so, yeah. So there are various policies that the government is putting through, and also with the support of the industry association, especially with the industry players, there's also requirements for self-discipline. Yeah, so I think we are seeing significant improvements. Yeah, and also policies to address the issue as well.
What sort of other policies are you potentially expecting then from the central government?
Right now, I think there's three in general. I think certainly what the government had already done is through a newly enacted price law that's preventing dumping from the industry or selling below production costs. So we've already seen a recovery in product pricing that's above production costs currently, which is, I think, is very positive for the industry overall.
And we're also seeing within the sector 50 billion yuan capacity buyout fund.
Yes, that's
How do you see that lasting? For how long do you think that can last, and how effective might it be?
Okay, I think the intention of buyout fund is really to accelerate the exit of excess capacity. I think previously there's the capacity that's already built is probably more than 2x of the industry demand right now. So with this buyout fund, the intention is to buy out maybe between 30 to 40% of the industry capacity, so that we over time will reach more of a supply and demand balance. So this is being discussed and moving forward right now with the support of the government.
And what are you in discussions with among other polysilicon players in the industry? What is the concern here?
I think the main concern right now is that there's the acquiring consortium of the major players, and there are the players that are being acquired. So there's discussion who is going to exit, who will remain. So that's being discussed, and then obviously there's the asset pricing. What's the fair pricing for these assets, right, to be bought out and later exit, and also the sources of funding is also being discussed currently. So that the details will still need to come out in terms of where the funds funding come from.
Are there any other challenges that have sort of been, foreshadowed in terms of this buyout fund?
Okay.
Some stumbling blocks potentially?
Okay. I think there are many phases for this to happen, right? There are various milestones. We're still kind of in the, I think, first or second phase in terms of there's an industry consensus that this should happen and this should move forward. We should accelerate the exit of the excess capacity. And then as we move forward, more and more details will be discussed. For example, in terms of who gets to continue to produce, right? Mainly the industry, while the more marginal players ultimately will exit. So as the discussion move forward, right, with the support of the government, I think more and more details will come, and then there will be more certainty about how this could be executed.
What is the one detail you think that needs to be sorted, ironed out?
I think ultimately, for example, the source of funding, right, definitely needs to be determined, and also I think the pricing of these excess capacity or assets, right, that also needs to be sorted out. Yeah, those are the main things. Yeah.
What is a reasonable level for polysilicon prices in your mind? What is reasonable in the market?
Okay. I think historically, if you look at, because the industry's been around for quite long, especially for the solar, right? I think with the new levels of production costs and efficiency, I think a more reasonable level is probably somewhere between 50 to 60 RMB per kilogram. And this would bring return on equity on investment of only maybe 15 to 20%. Yeah, so it's not like a lot or like a windfall profit for the industry, but it helps the industry to be sustainable, right? Remain in production, rather than the negative return that the industry has been suffering.
And when do you think we'll reach those levels?
I think we could reach that maybe as soon as this month, or in definitely in the fourth quarter. I think we've already seen fairly significant price recovery since June.
Okay, so we can potentially look forward to a turnaround already.
Yes.
Thank you so much, Ming.
Thank you so much for having me.
Really nice to get your insights on the industry as well as the company that is, of course, being bogged down by overcapacity still at the moment. Very nice to see you. Ming Yang is CFO at Daqo New Energy. Back to you, Paul.
All right, thanks very much, Avril. Let's take a look at how a few key commodities are tracking, particularly oil. A number of forces at play here. We're seeing oil holding steady, still pretty low, though. We've got an OPEC Plus meeting this weekend, of course, and now the conversation turning to the possibility that OPEC might increase supply yet again. We've also got US data pointing perhaps to a slowdown, so that's weighing on the demand side of the equation, and an industry estimate showing higher stockpiles at a key US storage hub as well, so a little bit of pressure on oil prices today. Well, Petrobras, meanwhile, says that there is a lot of demand for their products in Asia, which puts it in a favourable position to withstand the US trade war. Speaking to Bloomberg, CEO Magna Chombriard says India is an example of buying any product that Petrobras can export to the country.
No caso da Petrobras, a gente exporta muito pouco para os Estados Unidos. In the case of Petrobras, we export very little to the United States. So even if we were reached by this 50%, our export would be easily directed. We have India, China, Asia, they all demand a lot of our products. So we wouldn't be very difficult to remanage. But we export to the United States. We like these exports, and we buy a lot of things from the United States as well. And we're going to continue doing it.
When you look at the global landscape, the president has also put high tariffs on India, trying to pressure them to stop buying crude from Russia. Could that be an opportunity for more Petrobras exports?
Sim, nós exportamos. A India, por exemplo, well, India, for example, it introduces itself into Petrobras as a procurer of any product that we want to export there, as a buyer. You know, so we usually say, no, the Indians say, you are increasing your oil production, your production of derivatives, and anything that you want to export more, we will buy. You know, Asia as a whole also buys from us. We export, for example, a bunker with 24% of renewables to Asia. And every ship, every vessel that we send to Asia sells a lot, you know, with high percentages. And so we keep looking at that and looking at this industry that is going to continue being relevant for the next 2-3 decades. This is what we believe. So, and at the same time, we need to ensure that energy transition needs to take place in Brazil and that we need to be part of that and we need to deliver to that as well.
Oil products were exempt from a lot of these tariffs, but have you seen an impact on the supply chain? Have costs gone up? Have projects been delayed?
Supply chain tem sido uma questão, sim.
Supply chain has been an issue. For example, we had goods that are not shelf goods, and these goods need to be requested in advance in several of our projects, and we have seen some delays in delivery. So, for example, things that we needed, we expected to ensure 2 years for delivery times are reaching like 3 years. So this impacts some of our products as well. But I think that Petrobras needs to anticipate with itself with regard to these demands, you know, so that we can be more and more agile for the market.
That's the Petrobras CEO, Magna Chambriard, speaking to Bloomberg's Amory Audern in Sao Paulo. We have more ahead on the Asia trade. This is Bloomberg. Just want to update you on one of the big movers of the day, that is NYDEC, coming off session lows but still off more than 17% in Japan at the moment. Now, this is after the electronics component maker announced that it's setting up a third-party committee to investigate improper accounting, and that was triggered by a payment of about $1.4 million. That's about 200 million yen by its unit NYDEC Technomotor in Zhejiang. So an internal probe suggesting that there might be some improper accounting going on. So a wider third-party committee is going to investigate that. But in the meantime, we're seeing NYDEC shares getting hit pretty hard in Japan at the moment. Avril.
Yeah, Paul, we have other news also from the corporate front. Jane Street has filed an appeal in an Indian court alleging that the country's securities regulator denied it access to documents necessary to defend itself against accusations of market manipulation. The company has requested a stay on further regulatory action while seeking full access to review the relevant material. Jane Street's appeal argues SEBI had reviewed the trading activity and found no evidence of manipulation. Bloomberg has learned Hong Kong is investigating allegations of insider trading involving at least 2 people at the stock exchange and financial regulator. Sources say authorities are looking to see if regulatory staff at HKEX and the SFC tipped off traders and others of upcoming announcements involving dozens of listed companies. The firms themselves aren't necessarily linked to the investigations, which have been going for months. And Tesla is continuing to see a slowdown in sales across all big EV markets in Europe. New Tesla vehicle registrations dropped almost 40% in Germany last month, while also seeing declines in France, Belgium, Denmark, and Sweden. Norway has been an exception, with registrations rising 21% last month, Paul.
All right, looking ahead to the open in China at the bottom of the hour, we've got futures looking a little bit soft for China at the moment, more positive for Taiwan. The Asia trades, that's it for the Asia trade. China ahead next.